Let me make sure I'm good. Yes, I am good. So, good afternoon. Good afternoon. My name is Jamesiajohnai. I am the wealth creator. I show people how to use other people's money to pay their mortgage, create cash flow, generate generational wealth, and protect their assets. Today, we are focused on asset protection, right? So I'm going to compare term insurance. Thank you so much. Hey, Jessica, how are you? I'm going is permanent insurance using real estate to kind of explain the difference between the two as well as the best I can. Good afternoon, everybody. You're either watching this live in my Facebook group, Real Estate Entrepreneurship, Assets, and Leverage, or you are watching me on my YouTube, Workflow, Wealth, Entrepreneurship, Real Estate, and Capital, right? So, if you have not subscribed to my YouTube channel, please do that. And you can also join the Facebook group. So, comparing term insurance versus permanent life insurance, right? And I'm going to do it using real estate. So, and I'm going to hit four key points, it looks like. First one, when it comes to term insurance, right? Term insurance is like renting an apartment. So if term insurance is like renting or just renting, period, renting housing, rental housing, permanent insurance is like ownership, right? So term insurance is like renting, permanent insurance is like purchasing or buying a home, right? The upside to term life insurance, the positive of it is that it is affordable, right? Most times, depending on the market that one is in, it is more affordable, oftentimes, to rent than it is to own. Although we can show people ways that you can own for the same as or less than rent, but to keep things simple, for these purposes, that's what I'll say, right? So term insurance is like renting, permanent insurance is like ownership. So that's the first comparison of the two. Term insurance is more affordable. The permanent insurance is going to be more costly, so to speak, right? So I was able to insure a 38-year-old woman. She has a term policy, $1.6 million. She's paying about $60 or $70 a month, right? If she were to try to get a $1.6 million permanent policy with the same carrier, her premium would be over or somewhere around $1,000 a month, right? Just to get an understanding. However, there are benefits to term, there are benefits to perm, there are reasons for both, right? So, keeping in mind, this individual, she has a term policy for 10 years. She and I talked about the importance of her considering a permanent policy. The cheapest life insurance will be for you is now, because we are today the youngest will ever be. However, in 10 years, her children will be gone. So all of her insurable needs aren't permanent. Her children will be out of the house. Her youngest will be 21, right? So in 10 years, so for the next 10 years, what she's doing is protecting herself, her life. She has a death benefit, right? She also has a living benefit. So if something were to happen to her, there is the potential for her income to be replaced in her home because of this life insurance policy. So life insurance policies with the carriers or the preferred carriers that I work with also come with living benefits. So if this person were to become critically ill, have a category 4 critical illness, they could access up to 90% of that $1.6 million right now in life, right? Literally meaning life insurance company cutting them a check, right? It's important for this individual to also consider permanent insurance because her current term insurance will end at 48. She could have done 30 years, it will still end at 78. You get to a certain age where you cannot buy term insurance, right? The average age lifespan right now for individuals is 85, right? There's few and far between any term insurance that will last until 85. There are some that say they will last until 95. That premium is going to skyrocket though, right? That monthly premium. So when it comes to rent versus owning, right? When you think about rent versus owning, when I buy a house, so when I buy permanent life insurance, if I get a level premium, my premium is going to be the same year 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 on, right? My premium is going to be the same. When I get term insurance, when that term expires, if I go to renew, just like one might go to renew a lease on an apartment, the rent might go up. Now, the premium is not going to go up during the length of the term, but if at the end of 10 years she looks to get another term policy, the premium will be a little higher, right? So rent versus ownership, affordable, a little more expensive, but let me go to the next one. So same thing, right? So with the term policy, it's like a lease. It's going to expire. I mentioned that, right? Leases on apartments are like year to year. Some are month to month. Term insurance is anything between 10 to 30 years. Some insurance carriers are making changes and adjustments. There were some that did 35 years, but with everything that's going on right now, things are changing, right? Home ownership, permanent policy. So at the end of the term, you can either renew the term, or once you get to a certain age, you would have to convert to a perm policy. With a permanent policy, it lasts until death. So it lasts until age 121. Why did my name disappear? It lasts until age 121. And it's also, well, I'll get to that. I don't want to skip around. So it lasts until age 121. My little cheat sheet disappeared on me. I know this, but I want to stick to my points, right? So it lasts until age 121, but you don't have to pay it until you're 121. When people hear permanent life insurance, they think whole life, right? And some people think that you have to pay your whole life. You don't. I literally just ran an illustration for an individual. Her son is 15. His policy will be paid up in 30 years, right? So just like a term policy, we can set an end date for your premium payment, but the policy is going to last him until 121. So at age 45, his policy will be paid up, but it'll last him until he passes away, up until age 121 right now, right? So at 30 years, they don't have to pay any more premiums. For the granddaughter, I have it where it's paid up by the time she is 25 years old, 20 or 25. So at age 25, policy is paid up in full. However, it's still in force until the individual passes away, up until age 121. That's why permanent is more expensive than term, because term, 10 years, the odds are my client will still be living, right? Permanent policy, they know eventually they're going to have to pay out, right? So that leads me to my third point. When you think about a home ownership, oftentimes you're building equity, right? The equity in a permanent life insurance policy is most life insurance policies have a cash bucket. So they are growing in cash value. So you're paying a premium for your death benefit, but a part of your premium that's being paid is also funding a cash bucket. So it has an automatic savings vehicle attached to it, right? Some people, their policies, as illustrated, if they keep them for 30, 40, 50, 60, 70 years, they're looking to have hundreds of thousands of dollars potentially in their cash bucket that they can access. Now, unlike home equity, the insurance company isn't looking at your credit. They're not looking at whether or not you have a job. You have the ability to access that money in your cash bucket once it's had time to grow and mature and your policy is performing well. You have the ability to access the cash in the cash bucket. It's tax free. It does not count as income, right? So when you pull money from your 401k, you have to declare that money as income, right? It's provisional income, whether or not you are pre 59 and a half or past 59 and a half, right? So it's great that money going in, and you should have money in different places. Don't put all your eggs in one basket, but let me stay here for a minute. So people, 401ks are attractive because it lowers people's income tax right now, right? So it lowers your how much taxes you're paying. You're getting more of your paycheck upfront. Did not articulate that well, but hopefully you follow me, right? So people are looking at the tax benefits of a 401k because the taxes are deferred. However, whenever you pull money from the 401k, even once you get to age, so if you pull money before 59 and a half, you will pay a penalty as well as taxes. So you're paying a penalty, you're paying the taxes, you're paying the fees, but then you also have to declare that as income on your income taxes. If you're 59 and a half or older, there are not any penalties. However, when you pull money from your 401k, you have to include the money that you pulled as provisional income as well. So it's like you're gonna be taxed again. Well, you're gonna be taxed on the money because it was tax deferred, but then you have to declare it as income, and that can impact Social Security and things like that. But I won't talk about that today, right? So you can build equity with a permanent policy. You can build equity, meaning you can build cash value. Term policy, you pay it, that's it. There are some term policies that have return of premium, but those term policies are going to be more than your basic term policy. What that means is you could do a 20-year or 30-year return of premium term policy. At the end of that term, if you're still living, you receive all of your premiums back, right? So your premium payment, if it was $100,000 straight regular term, the premium for $100,000 return of premium term is going to be more because they know more than likely they're either paying this out or giving you your money back. Nevertheless, it's not building any cash value. There is no bucket you can go and access, right? So people right now who may have had policies for 20, 30, 40 years that have never touched their cash bucket, can get some financial and economic relief during this time, because they can call the insurance company and say, hey, I need about $5,000 or $10,000 out of my cash bucket. Thank you so much. Don't have to report it to the IRS. Don't have to pay any taxes on it. And depending on how much money is already in the cash bucket, how your policy is set up, you may not even have to put the money back, right? But these are things that if you have a policy, when you call to pull the funds, you're asking them to do a current illustration so you can see how your policy is going to grow and what's going to happen to your policy anytime you make changes to it, right? And then finally, when I mentioned this already, once you're done, you're done. So you don't have to pay permanent forever. Permanent insurance can be paid up in 20, 30, 40 years. Just depends on how old you are, how much coverage you're looking to get, and what your monthly premium is when it's illustrated. But a professional like myself can help you with that. With a term policy, when it's over, it's over. If you're still living, if you don't have return of premium, what you pay for insurance while, during that time frame. Just like car insurance, you pay car insurance, you don't have a car accident, great. You were insured, you were covered, right? So hopefully people have a greater understanding of term insurance versus permanent insurance. There is no one size fit all for any individual. So when a professional is sitting down with you, hopefully they're sharing with you all of your options, and then you make the best decision for yourself with that professional based on your insurable need and your affordability, right? Because life insurance is something that you want to keep and pay and take care of, because unfortunately there's only one way out of this thing called life, and we don't want to leave our burial, funeral, cremation, whatever our options are, we don't want to be a burden to our family members, right? There are some that promote buy term insurance and invest the difference. I'm not against investing. I'm not against doing what works best for you. But what we're seeing right now, as well in the marketplace, is there are some people that maybe they bought term and they invested the rest. There are people who have lost a lot of money in their 401ks, 403bs, pension funds have lost money, and etc. So you want to have understanding that life insurance is in your tax-free bucket, 401ks, IRAs. So life insurance and Roth IRAs are in your tax-free bucket. 401ks, 403bs, etc. are in your tax deferred bucket. And then your bank account, money markets, different things like that, anywhere that you have money that you're getting a 1099 at the end of the year every year, that is your taxable bucket. You want to have a good mix in all of these buckets, or they're actually specific amounts that you want to have in all of those buckets, but that's a different live that I'm going to do either this week or next week. So I am jamesiajohnai, the wealth creator. I show people how to use other people's money to pay their mortgage, create cash flow, generate generational wealth, and protect their assets. I hope you have a greater understanding of term insurance versus permanent insurance. Sit down with a licensed financial service professional to discuss what options are best for you. Everyone should have life insurance outside of their job. I think about people who have lost their jobs recently, are currently laid off, etc., who are like, no, I'm good. I have insurance on my job. Now it's like, now what? Now is going to be the best time to get life insurance, because this is the cheapest it will ever be. Life insurance is based on your age, it's based on your sex, and it's based on your health. Every day we're getting older. Hopefully, we're not getting unhealthy, right? But things happen. So today is the youngest that you will be. most licensed professionals will offer you a free consultation. I offer free consultations. The link to schedule a consultation with me is on the screen or in the title of this video. I am licensed in multiple states. I'm licensed right now in Illinois, Michigan, North Carolina, Georgia, and I think that's it. I'm open to getting licensed in other states as well. It's just a matter of me applying at this point and paying a fee because I'm already licensed in Illinois. So feel free to reach out to me, connect with me, share this video with someone else if you want to share it. You can't share it outside of the group, but you can visit my YouTube channel, which you can find on the link tree, and feel free to share this video with someone else. I would love to break it down even further, right? So term versus perm is like either you're renting a home or you're buying a home, either you're building equity or you're paying equity for somebody else, right? So I am jamesiajohnai. You all have an awesome day. You are so welcome, Corliss. Thank you for being in the group, watching this video and commenting. I hope everyone found value in this. Like the video, love the video, share the video, comment. And for my YouTubers, be sure to subscribe. Have an awesome day. I hope you and your family are in good health, good spirits. If you're experiencing some sort of anxieties or anything like that, there are meditation apps out there, calming apps out there. There are therapists and professionals that are offering their services to individuals during these interesting times. Have an awesome, awesome day.